We're live.
Woo woo! We're almost all here. I'm excited.
I'm excited too. We have a very special guest today.
Who we do? Who's our guest?
It's Dan Bardenhagen with Northpointebank, also a really good friend of Tom's.
Yes, and he does all my loans, and we have him help us with a lot of our clients. So I'm excited to bring Dan onto the show because today it's going to be really all about mortgage and the industry. It's been crazy. It's everything everybody's talking about um, in the market, and I think it's important and relevant. So why don't we bring Dan on? Dan,
Tom,
what's up, buddy? Welcome to Lunch with the Lifestyle Maui team. I appreciate you showing up and being part of the show and being on it with us.
yeah,
So,
thanks for having me.
why don't you just give us a little overview of what's happening in the world of mortgages globally? I mean, not just Maui, but pretty much everywhere, and what your take on it is.
Yeah, I mean, rates, they went up fast this year. That caught everybody, I think, a little bit off guard, buyers, agents, mortgage people. Um, and, it was a fast adjustment that we had to make to just adjust to it and to get people comfortable and educate. But yeah, generally speaking, if you look at the news, rates went up fast. That's what happened.
Well,
And there was a
in my
series of events that caused that.
My short 30 years in this business, it's the fastest I've ever seen rates escalate. I don't know
Yeah.
for you if it's been the same. And so it is
Yes.
a little off-putting for consumers out there. But so why? Why did it happen?
Well, so, and, so I saw kind of knew this could happen and could happen fast. I have a background in economics. So I was looking at the quantitative easing that the government was doing. So they were buying our U.S. Or our Treasury bills to keep that yield down. They were also buying mortgage-backed securities.
What's a mortgage-backed security?
That is just basically a mortgage.
Okay, thank you. And
Okay.
quantitative easing, I didn't even go there with you, but can you give us sort of like the non-economist explanation of what the hell is quantitative easing? Because we hear it on the news, and I was like, what the hell does that mean? So can you sort of dumb it down for me? Because
my understanding of it,
but
my understanding of it is the government, U.S. government, buying U.S. treasuries, and maybe other things as well, but U.S. treasuries in particular, that keeps, when there's demand for the U.S. treasury, so the ticker symbol would be like TNX, 10-year treasury yield, that will raise the price of the bond, and the yield works. The yield will go down. Prices of bonds go up, yields go down. So the government basically could put their foot on the gas pedal, inject money by buying those bonds, keep that yield down. That it was the reason in my opinion, that we saw the 2.5%, 3% rates.
So
we
bonds,
always knew. Yeah,
so when bonds are high, interest rate is low.
Yes. Yeah. When typically we used to think, typically when there's a bad day in the stock market, you think people are taking their money out of stocks, and there would normally be, you'd see the bond prices go higher and the yields fall because people are taking their money out of companies, they're putting it in something safer, that price goes up, the yield goes down. So we used to think, always when I saw the stock market dump, I'm like, oh, it's a good day for rates. Recently, a lot of that stuff hasn't, it hasn't really worked that way. A lot of days you'll see the yields go up and be a bad day in the stock market. I mean, it's just kind of been very, very volatile. But the government stopped. They have, I think it was $9 trillion on their balance sheet. And before they would ease some of the economic pain with placing more on their balance sheet. And my understanding right now is they're trying to sell their balance sheet to lower that $9 trillion in debt.
And is it because of inflation though, too, that they want to slow the mortgage rate or raise the mortgage rate so people stop spending?
Yeah, they have to get, a lot of this has to do with getting inflation under control. But there are a lot of things, in my opinion, that have been out of whack for a long time, as far as, the amount of debt the U.S. government has, what they were doing with the quantitative easing, where the mortgage rate was. And now it's kind of this acceleration of the mortgage rate that we've seen go up so fast is a result of what, policies and actions have been in place by the government. So, now instead of, quantitative easing, they turned around and they're trying to offload their debt. It's the opposite. So the mortgage-backed security market, to my understanding, is on their own now. And that is another reason for, rates going up. It's all priced into a mortgage rate.
So basically what I think you're saying, and correct me, is now the mortgage market is going to reset and find its proper level of supply, demand, and competition.
Yes, that's a good way to put it. And the Mortgage Banking Association, I believe, came out last week and more or less feels that should happen by the end of 2023 is so where the rates they believe will be around 5%. And that's where they should be. I believe it was the NBA that came out and said that. And maybe
National
even
Basketball Association?
Oh, no.
What are they doing in there? So basically what I heard you say is by the end of 2023, the pundits and the forecasters who don't have a crystal ball are saying that we should hit some degree of stabilization and rates should then start to come back down to a more stable basis rate of about 5%.
Yes, and I hope they're right.
I do too. That's the dream that we have, that we get back there. Now, something put in perspective. I think I'm looking at everybody here. Yeah, I'm definitely by far the oldest person on this screen right now. My first interest rate on my first house was 10.75%, coming out of the 1978 era of 21% out of Jimmy Carter's reign. There will be some people who will remember that. But my first interest rate was at 10.75%. And then I just kept refinancing as it went lower and lower and lower. And so the refinance market is someplace that we need to look at and see how do we manage that. So with that being said, I know that the market's really chaotic. How does somebody who says, I want to buy right now, I need to buy right now, I'm going to buy right now, and I'm going to get a loan, what's the best way for you to help them to frame this interest rate, and how do we make it palatable?
Date the rate and marry the house.
Okay. I've heard that once or twice before.
I've only said it once out loud, but
I know.
Yeah. I mean, I tell, I try to educate people on what, the experts say the rate cycle may be. And if they're comfortable with that, then I go into the ARM loans, because they're a lot of times they are lower priced, more on the jumbo end. They're lower priced than the conforming end, but a lot of our stuff is jumbo. And then we're at a lower level right then than a 30-year fixed jumbo. We're in an ARM loan. That helps out a little bit. Then I just get them comfortable with the payment. I normally break it down by eighth, to say, hey, it sounds bad, but maybe it's not as bad to you as you think. Maybe it's only $40 per eighth, and some people just get stuck on numbers sometimes in their head. And then once they realize what the payment be and it's not forever, then they just get comfortable. And so I've seen a lot of that.
So what about, and any of you other guys, if you have a question, I'm just sort of spitballing here. If you have something that you want to chime in, just chime in. What about for our sellers who are now realizing the market slowed down and they realize that the buyers are like sticker shock with the interest rate? Is there anything a seller can do to sort of be proactive about this? You know, one of them where I'm going to is like a 2-1 buy down or a 3-2-1 buy down, and those kinds of things as a marketing tool.
Yeah. So a lot of mortgage companies pivoted right to a, re-rolled out the 3-2-1, 2-1 buy downs. And what that is for everybody out there is, say the rate is 7% today. On a 3-2-1 buy down, the first year, the rate would be 5%, 6%. Actually, that's a 2-1 buy down. 5%, 6%, and then the third year and on would be 7%. What that does is that just eases a buyer into the payments, or if they have the assumption that it's 2 years I'm going to refi anyways, their payments are lower for the first 2 years. Now the difference between those payments each month can be paid with the seller credit. So and typically that is better way if you think that you're going to refi in a couple years. That is a better way than spending the seller credit just to buy down a fixed interest rate. At like 7%, you buy it down to 6.5, or it's a bigger bang for your buck for those first 2 years. So I get that question a lot. It's like, should I spend the seller credit just on a, buying down the points to a rate, or should I do this 2-1 buy down? So my answer is, well, it just depends on your appetite for risk and what you think is going to happen, and how much experience you have in the mortgage market. Whatever that buyer is comfortable with is kind of what we go with.
Got it. So, team, did you guys understand all that? Any questions about that?
So are lenders charging more points right now on loans than usual?
Yes. Yeah. There are scenarios and spots where there are just no par rates, we call them, with 0 points. That is because interest rates have gotten so high that there is, in some cases, not par pricing where there's 0 points. And that is something that hasn't been seen for a long time. But yeah, there are those scenarios, especially on like a condo investor. There's just not a 0 point scenario out there. When you do the add-ons, yeah.
Why are the banks doing that, Dan?
I studied it one day about it, that's a little deep for me as originator to get into, because I never really saw it, right? In the past, gosh, I don't know how many years, 15 years, maybe. I never really saw it get to this point. It has to do with the price of a mortgage and what the investor will pay. And that is why premium pricing in some cases have been gone. I'd love to go into it deeper. I'd have to study a little bit more or look back at my notes, because it's
like a topic for another show.
It's complex. It is it's more about the secondary market, who's buying those mortgages and what they're paying for them.
So
and that's why price went away.
Let's talk about that. You used the term the investor. So can you explain when you say the investor who's buying the mortgage? So can you explain a little bit, maybe just sort of the basic premise of how the mortgage system works? You're Northpointe and it's like, well, am I not getting the money from Northpointe? Or how does all of that work, so people understand that their mortgage has a life that lives on, or that it, when you say gets sold? Can you explain a little bit about how that works?
Yeah, like on portfolio lending, that bank is normally the investor, right? So like Northpointebank, they would be the investor on that. They'd hold the mortgage, they gave the money. On a true portfolio product. But then you have like an investor, Fannie, Freddie, those are investors, and then we'll service that loan. So when you get your monthly statement, you may see Northpointebank, but the investor is actually Fannie Mae, Freddie Mac. It could be there's other investors out there as well. Also, there's investors with a bank, as well as like partners that inject money into a bank to fund mortgages. So there's investors in that sense too. So there's a servicer and there's investors. Sometimes that servicer will be your investor. A lot of times they won't. You won't even ever know who the investor is. Unless you have a Fannie or Freddie loan. There's actually tools on the internet that you can go look up and see if your loan is Fannie or Freddie. That came into play a lot when they were doing refis and through COVID and things like that.
So just to be clear too, when he says Fannie, he means Fannie Mae. When he says Freddie, he's talking about Freddie Mac. And those are two quasi-government organizations. And when I say a quasi-government organization, they're managed and controlled by the government. They're limited on what they can and can't do, but they're not completely government agencies. They're sort of in between government and private sector. Is that accurate, Dan?
I think so.
Well, good. But again, we're just talking you're using some terminology that, as a realtor, as a loan officer, we may know, but as a consumer, it's like, what the heck is he talking about? I'm just trying to provide value and be clear on some of that stuff. So let's talk about some more simple stuff, things that people are asking questions about, like if I want to buy a condo on Maui, how long is it going to take me to get a mortgage?
Yeah, great question. That depends on the product that you pick and what type of condo it is. So it really can range anywhere from 30 days to 60 days.
So on the mainland, I know that there's places where people can get loans and get them closed and finance them in 20 days. How come we can't do that here?
Yeah. Well, the mainland is for a couple of reasons. Table funding state. They don't have good funds law, and so that's
stop.
Yeah, I'll
table
stop right
funding
there. Okay.
state. Table funding state means that everybody goes to the closing table. They sit around the table. Their attorneys are sitting with them, and they all sign the documents and they push them around the table. That's a table funding state. Illinois was a table funding state. There's a bunch of states. The other kind of closing process is escrow. Go for it, Dan. An escrow. So if it's an escrow state, that's where you have an escrow officer, and they push all the documents around days before the closing, and everybody signs it, and then the escrow company packages it all, and then they take care of recording it along with the title company. Is that?
Yeah, and we have to fund 2 days prior to recording. So there is, normally when you sign, you record about 4 days later in Hawaii if you're here on island. If you're not, then those docs have to come back, and that's about, maybe 5 days after, depending on a weekend. So that shaves off between those 20 and 30 days. In my opinion, that's kind of what does it. But I mean, you can close a loan. If an owner occupant is here, they're buying a regular condo and they want to close in 20 days, that's definitely possible. And we've done that this year. It's just not the norm for our market, what we normally see. And but if you do have that scenario, it can be done, definitely.
Yeah, and one of the things I will say is that very often if the buyer is on island, the seller is on island, it makes it a little bit easier because they can walk into an office and sign documents.
How can you know how much you're qualified for?
Yeah, so people call us every day. We get them to fill out an application. We check out their returns, and I scrub it against every program that I have knowledge of. And we come up with the best option and the backup option. So sometimes the best option will be a lower price that you're qualified for, and the backup options will be a higher price, but at a higher rate because it's a more exotic program, like using bank statements to qualify for a self-employed person instead of a 2-year average of their income. So with all of the products and programs that we have, it's just more combinations of what works, and I try to lay it out for the buyers so they can just make an informed decision. But we generally want to look at their income. We want to know their assets, but income, it's really income driven on exactly how much you qualify for.
And then do I have to have my job? I mean, do I have to be employed? If I'm a W-2 employee, meaning I got a payroll check coming in every week, how long do I have to be employed before I can, before my that income qualifies?
That's a great question. I mean, so if you're in the industry, same job, and you just started a new job, first pay stub. I mean, we can start that loan right away, and people can change the job in the middle of the loan. As long as it's the same job, we use your base salary. Now, if you go from like a base salary to 100% commission, can't use any of that, because you need to have at least a 1 year receipt of or a history of commission. But W-2 to W-2, same line of work, that can be instant. Say you went to school or you were in the police academy. You come out day one, you get a $50,000 salary. You can use that day one to qualify for a loan because you had the schooling and now you're in your full-time job. So the real key to W-2 income is, and if it in job changes, is the base, the stable base, whether it's hourly times 40 and that it's full-time. So base, hourly, or base salary are the things that you can use right away, day one, if you make a job change, assuming it's the same line of work.
Okay, cool. How about if I buy a house, like in Maui, we have houses with ohanas, attached additional dwelling units. Can I use the rental from that unit to help me qualify for the purchase?
Only on a couple programs called Home Ready and Home Possible. But it's not just, the short answer is no. You can't use it unless it's a true 2-unit. When you think 2-unit, you think 2 water meters, 2 same size houses, that kind of thing. Not a house in an ohana. There was a time that you could use it on the ohana. That went away. Under those 2 programs that I mentioned, the guidelines go a little bit deep. One of them, it has to be a live-in aid for some very particular circumstances that you normally 99% of the time would not see. So just buying it as a owner occupant using ohana income, the answer is no. Okay. Accessory dwelling unit.
That's
for everybody out there.
All
yeah,
right.
it was great when it was around. I used it a little bit, and sometimes you can get away with. I've done this sending, because it's a gray area between a 2-unit and a house in an ohana. You can roll the dice. You can call it a 2-unit. You can send that appraiser out there. You can order a 2-unit appraisal. If that appraiser appraises it as a 2-unit, you can use that other unit's income. But you run the risk of, in the middle of a transaction, that appraiser saying, no, this is a house in an ohana, and then you can't use it.
Well, Dan, can't you just push it through? Don't you make all the decisions as the loan officer?
I wish. No, not the type of property. That would be more appraiser.
But so how does that system work? I mean, I was being funny there, but people think, oh, well, Dan goes to the bank, but then there's this guy behind the Wizard of Oz, behind the curtain, that we refer to as the underwriter. What's the underwriter? Who is he? What does he do or she do? And why do they have so much power over you and the consumer?
Yeah, if they let originators underwrite, which at one point they did, and we would, there's just too much risk there, as far as us approving a borrower and following all the rules and making sure that too much conflict of interest, right? So the underwriter is in place to double check that originator and making sure that file has crossed every T and dotted every I, so it's sellable to the investor and meets all of the investor's guidelines.
So that's what it's a checks and balances system in.
Yes. Yeah.
All right. Perfect. Questions, anybody else? Lots of information here. So.
Well, let's talk about Mortgage Resort. Dan has this fun upcoming project.
Yeah, great. So in a couple months, we'll be launching the Mortgage Resort. And that is a venue that I've built for real estate agents. And buyer seminars as well. We'll do occasional buyer seminars there. I'll meet buyers there by appointment. I'll be working out of the office. But just a place for real estate agents to come to learn about all these programs so they can be more educated for their buyers, because the mortgage industry changes a lot. The programs changes a lot, and education's a big part about it for you guys because you're the first ones that talk to those borrowers. But yeah, mortgageresort.com. The website's up. I can't wait to schedule the first event. They're finishing drywall and all that good stuff now. And it's going to be a fun place. And, we'll see how the vision goes. But buyers too will like meet there, but events as well. But the day-to-day, the weekly events are for real estate agents. Coffee talk, run club. I'm honing in on a yoga instructor.
Sounds like you're trying
so
to
we
cut
can just
Facebook out here.
do stuff together.
Nice.
Yeah.
I love it. Well, cool. Anything you want to add, Dan? I know we've been on for a while, and I know I appreciate your time, and I just was curious if there's anything that you wanted to put it out there to our watchers that might just be looking at getting a mortgage or looking at selling, or what you would recommend. And then I want to turn it over to Amber and Justin and Michelle and Stephanie to see if they have any other questions. But
yeah, I would just the biggest advice I can give is, like, I had it happen today where somebody got a pre-approval letter from me 5 months ago on a single family residence. We even went the extra leg and went to the underwriter and got a conditional loan approval. And then this morning the agent's calling me, and they've decided to spin to a condotel. I mean, just a completely different type of underwrite.
what's a condotel?
A condo that allows rentals by the day.
Okay.
And it's a portfolio product, a different underwrite, totally different guidelines and things like that. So just an example of just stay in touch with your lender, especially during these times of volatile rate environments. And if you're going from a house to a condo or a different type of product, just make sure you check in with the lender and man, run every property that you think you're going to make an offer on by that lender and get reapproved, whether it's reapproved 10 times, 20 times. That's what we're here for. And that's what we do all day. So yeah, make your lender work and find if that's me.
Yes. And I've made Dan work in the last couple of weeks, so I appreciate it.
Yeah.
And it has been a journey, and I think part of this journey for me has been I've been investing in some small houses on the mainland, and the interest rates basically almost 1/3 or 2/3 more that are doubled from when we started the journey, and it's painful. But it's part of my investing strategy and my plan. And Dan has just been great to work with, and he says you're not going to like it, but this is the best thing we can do, and we're just going to change it up in a year or 2 years when that opportunity arises. So. Any questions from Amber or Justin or Stephanie?
Sure. First of all, congratulations, Dan. That sounds like a fantastic project. I look forward to being a part of it and participating.
Awesome.
So thanks for getting that all done. Kind of along your lines of to-dos and not to-dos. Once you get your pre-approval, so we bring you a client, you go through the pre-approval process. Awesome. Now we have a pre-approval in hand. One of us on the Lifestyle Maui team we find the property, we open escrow. What are our clients not to do once we've opened escrow with their current pre-approval?
Yeah.
Good time to buy a boat?
Before you go. Yeah. So great question. Yeah. Don't do any. And I send out, when we open up escrow, I send out, and this is all bullet pointed to the buyers. Before you make any job changes, let us know. Before you buy any boats or anything, let us know. Don't spend any money on credit cards. We pull a soft pull 10 days prior to closing. If those raise up, that could knock your debt ratio out. So yeah, stop spending on credit cards. Don't get any new debt. Don't switch jobs. Those are the main awesome. Things. But yeah, I just we've had it happen too much, and well, actually, we haven't had it happen too much, but enough to where I'm like, why don't I have this day one in an email listed out? Just don't do these things. And so I finally
Dan, if the clients are working with us, they'll get a buyer's guide. And in our buyer's guide, there's a whole page that says, if you're financing, thou shall not, because we want to make sure that they are aware. So we're reaffirming that information as well. So great question, Amber. And yes, we just want to make sure that our clients are successful and don't do something that they don't realize is going to affect them. Because people sometimes don't know that if you take that installment loan out on whatever it is, that affects their ratios. So
yeah, great question.
All right, Steph, anything for us?
Yeah, I have a question. What do you think some of the benefits of working with a local lender versus a mainland lender are when they're purchasing a property here?
Yeah, great question. Local knowledge, especially in the condo space, we just, everything from being an escrow state, knowing how escrow works, having the right insurance resources, knowing that there needs to be hurricane insurance out here in Hawaii, and the time it takes from signing to closing, and the condo approval. And condo approval is such a big piece. I see this, I save deals like weekly on this, where the mainland lender has gotten the appraisal back and they go, no, this is a condotel, we can't lend on it, even though they swore that, that they could. And a lot of times they swear that they can because, hey, they're not in that state. They don't have a reputation to all you realtors, and it's the pressure's off. And so that's the biggest red flag, in my opinion. And I'll be honest, when I'm doing a loan in another state, the pressure's off a little bit. I don't have the relationships. I want to get the loan done. We always want to get loans done, but that relationship, there's no relationship between that real estate agent and that loan officer. And that is really what will drive your loan, to officer to set the right expectations, to get closed on time, and to have the communication piece there. And that's what gets deals closed. So those are the reasons I'd say use a local lender, especially in Hawaii.
Thank you.
Yeah, and I think too, Dan, what I've experienced in my career here is that and I've had some good loan officers on the mainland. I've just had one, but generally speaking, some of them don't even understand that there's a difference between a condo and a condotel. They hear condo and say, yeah, we can do that, and don't recognize that the lending guidelines are different between a condo and a condotel. And for folks watching, a condo is property that mostly are long-term residential. People live there, and they don't do vacation rentals in it. Now, there are some that are condotel-esque, but they don't have a front desk. There's all these different nuances about the properties, and that's where having somebody like Dan who knows the properties says, I can do a regular condo loan here, and this one's going to be a condotel. And what that means is about an eighth to a quarter of a point, Dan, in a higher interest rate between a condo and a condotel.
It can be anywhere from an eighth to 3/4.
Okay. So, and where that becomes problematic is you call a loan officer on the mainland at Rocket Mortgage or wherever, and they say, yeah, we can do condos, and they quote you a rate of 6.5%. And then they do all the paperwork, you fill everything out, you get the appraisal, you do all of these things. And then the processor, Dan, the processor, submits it to the underwriter, and the underwriter, who's much more knowledgeable in this stuff, looks at the file and says, whoa, this isn't a condo, this is a condotel. Yes, we can do the loan, but instead of it being 6.5%, it's 7.25%. And now we've got a week left in the process, and the buyers are freaking out, saying, wait a second, this is not what I signed up for. Even if they're approved, they're feeling like they're getting the runaround. And that's where that disconnect comes. And if you talk to a local Maui lender and they quote you this 7.25%, and then you go to Rocket and they quote you 6.5%, it might be because you're not asking the right questions and saying, hey, this is a condotel, are you quoting me a condotel rate? But it's much better to just use a local lender and get it done, because they understand so many other of the nuances. I think that's my pitch on all of that. I think you probably agree with me, Dan.
Yeah, and if that customer, that buyer is just says, no, they just put their foot down and say, yes, I want to use my mainland bank, fine, do it. Double app. Use me too. Let's see who gets to the finish line. That's how I deal with that.
Double app. Explain what double app means.
Yeah, you can do an application with that mainland lender, and you can do an application with me. All you're out is to appraisal costs, deposits. I mean, you're buying an $800 million property. What's another $500 to make sure that loan gets across the finish line? There's nothing wrong with having two lenders compete for a loan to make sure your loan gets closed.
And you're getting the best rate.
and you're getting the best rate. Yeah. And you're getting closed. So if somebody's really wants to, a lot of buyers do not do that. And I'm always okay with it, because a lot of times when we're talking about a condo hotel, I know they're not going to get there, but hey, if you want to try it and they can, more power to you. I want you to get the best rate, but 9 times out of 10, they fail.
Michelle, we have a new video, double app. All right.
Double app. Perfect.
Dan, thanks so much for being with us. I know we took a bunch of your time. We really appreciate it. And your knowledge is amazing on that industry. And if somebody wants to get a hold of you, how do they reach you?
808-280-6168. You can email me at danb@northpointe.com, or you can go to themortgageresort.com and click contact us. And either way, you'll get to me, or just Google Bardenhagen.
Yeah, really, there's not many of those that show up. Bardenhagen, Maui, and you'll find it. Even if you spell it wrong, it'll show up.
Yeah.
Did you mean? Yes. All right, brother. Well, we appreciate it so much. Thanks a ton. And I think I hear somebody saying dad in the background.
He just came in the room. Yep.
Sweet. Well, give him a hug for us. We've kept you too long. Thanks, man.
Okay. Thanks.
Bye.
All right. Bye, everybody. Bye.